everybody, and welcome to another Raffles Crew podcast. And I'm delighted to have with us once again Gary Dugan. Welcome, Gary.
Hello, Simon. Good to be with you.
Gary is a storied banker and an expert on markets global, but specifically on Southeast Asia, where he's based in Dubai. And I understand, Gary, that there has been a totally new data set from the IMF as of yesterday.
Indeed, yes. And you would think there might be change given the mayhem of the last quarter. But to be honest, most of the forecasts are comfortably very close to where they were before. So if I just give you a few headlines.
Okay.
The IMF now expects 3.2% growth in 2025. Now that compares with 3% before. So remarkably, with all of the backdrop we've had, growth forecasts have gone up rather than down. And the estimates into next year of around 3%. Now, the next number people look for is inflation. And although we've had lots of talk of tariffs, we've had tariff implementation, at this point in time, people are not seeing a remarkable change on inflation. The good news for Asia is that in general, forecasts have had an upward bias, I would say, and I think that's been led by the tech sector. So, as I said, comforting words from the IMF. But they keep talking about the structural challenges, which have been there, quite frankly, for the last 2 years.
Okay, well, you were not terribly positive last time we talked, and you're sounding a good deal more positive now. So let me pick up on a couple of the things that you said. So for the region, Asia, their forecast gone up from 3% to 3.2. Did I understand that correctly?
No, that's for the whole world.
Oh,
But Asian forecasts, as I said, are largely unchanged. Even if we look at an India or a China, the numbers are kind of around the 4 to 6% level.
which in global terms is definitely in the top quartile, yeah. Um,
Indeed.
you also mentioned, and I'm picking you up on this because as I think you know, the Raffles crew and Salamander Associates are partnering with Wavemaker to do a Tech in Asia session on the 4th of November. This is the week before the FinTech Festival in Singapore. And so we're inviting people to come along. We've got about 100 places to meet innovators, to meet financiers, and learn what's going on in the tech space. Now, you mentioned that the increase in the growth forecast is driven, at least in part, by tech. Is that right?
Very much so, very much so. I think there's been two elements to a big capex wave. So capital spending globally has been running at a double-digit number. It's 11%, which is a huge increase. And you talk about the whole globe in aggregate. Two elements to that. One has been tariff driven, and one is AI. I think people have just been shocked at the AI phenomena, and therefore everyone feels that they have to catch up with it. So there's been a really aggressive spending wave going on, which is kind of virtually multiplied as we've gone through the months. The second thing is that with the tariffs that have come from the United States, a lot of companies have, not speculatively, but just taken risk out by putting a lot of their orders front end loaded in order to avoid tariffs or the risk of tariffs. So put those two numbers together, you end up with this 11% growth. It's the peak. It will come down. It has to come down from that level, but it's a very, very strong trend.
Well, that's really very interesting. I mean, I suppose the devil in me wants to ask, is that spend on AI invested in capabilities that are going to have a direct impact on profitability, or is it a kind of slightly panicked investment? Because what I hear constantly from my clients is, what should we be doing? Do you think there's a bit of that going on?
There is, and I think there's a sense that you have to do something. So when you have to do something, you actually spend money a little bit speculatively. But look, this is an ordinary trend, right? This is what typically happens when something new comes into the market. And we would remember back to the internet boom. And yes, a lot of money was wasted and lost at that time. But the funding that came in got the phenomena going and has obviously had a dramatic impact on our lives over the last couple of decades. And I would say the same with AI, but I think the what we're finding with AI, it is having an immediate impact on the labor market. I mean, the internet added to employment. AI is detracting from employment, and that's what people are concerned about. But I would say no, barrel ahead. You've got to understand AI, but be circumspect about spending far too much money on speculative capital spending.
Yeah. I mean, I think that's one of the axioms of the moment, really, is that the people that do well are going to be the people that understand AI and can explain it. And for, gray hairs like me, and I don't want to say you, Gary, because I know you're a young man, especially at heart. Um, I am profoundly ignorant about AI. And I think one of the things that's very clear as I go around Asia and talk to companies is the gap between senior leadership and more junior members of teams in terms of fundamental technology in general, but specifically about AI, what it is, what it can deliver, and what we should be doing differently on Monday.
Indeed, and I think it's you've got to pick up the stories from your colleagues. You've got to try and read around the subject. But I would say just take your time because I'm seeing people just jump into something because they've heard it around a coffee table, as opposed to working out, does this structurally, strategically take me the right direction?
When you lead me beautifully into a little commercial here, because I completely agree. People are doing AI things because service providers are coming and telling a tale, which has always been an issue with tech and automation. And because out of a sense of, oh, I've got to be doing something. In order to address that issue, what I should be doing, the Raffles Crew is going to be running a series of seminars starting very soon on understanding what's available in AI, but more importantly, creating a framework where individual executives can actually work out what's available and what might suit their needs and deliver value near term. Because I genuinely think that that knowledge is lacking. In other words, the link between shareholder value and AI opportunities, I think, is very weak at the moment. I think people are being quite tactical and quite reactive. So we're going to try and address that gap. Let me ask you this, because a number of us have noticed that there's quite a lot of drama going on with China at the moment, and Trump. What's that going to do you think, to growth from China and to the economic outlook in general, if anything?
But yeah, I mean, if you take the aggregate things that Trump has done on trade, unfortunately, and again, I'm going back to IMF numbers, they put a figure on it. It's taken about 2 to 3 tenths of global growth. What is it? What is happening? I think you've got to look at the big picture. China's got bigger, and the US has just realized. I'm making it very simple, and now sees it as a true competitor in markets,
Mhm.
and therefore is starting to put the barriers up. And because they're kind of living in China's wake. I mean, when I saw in the UK press in the last few days, that a few CEOs had gone over to China, couldn't believe the degree to which robotics had been implemented in factories. So I think there's a waking up to the threat of China, but it's clearly just China's not trying to be a threat. China's doing things for
No, I
its
agree.
own benefit. So I think it's sometimes the American view of things is too aggressively negative.
To be fair, it's not just American. I mean, there's a big chunk of the media in general that what seems to want us to be terrified. Whether it's about Putin invading Western Europe or it's about the Chinese eating our lunches. I mean, I agree with you. It looked at in aggregate, it's not clearly the case that China has an expansionist strategy. They're just trying to get their economic model fixed so they can feed their people. I don't think that's changed. What's I mean, one thing you can't help noticing, and I know you know this, is it's true that China appears to have a growing advantage, but the fact of the matter is they export far more to the US than does the US to China. So China doesn't have a lot to gain from tariffs, and it has every interest, it seems to me, in striking a deal with Trump. Is that not correct?
I think the dialogue's moving on and things are changing. So to your point about the importance of the US to China, exports from China to the US have dropped by 25% year on year. And okay, and it's almost in a sense as if Trump has accelerated a trend that China was on in any case, because China's reliance on the US market had fallen quite dramatically
Hmm.
since the previous Trump regime. So I think China's moving on. It's just when the rest of the world is going to buy China product. And I live in the Middle East, where quite frankly, more and more of the cars on the road are from China because
Yeah.
they actually produce the best cars.
I think I agree with that. And there's a sort of inevitability to the rise of China, given the level of scale they've got and the pragmatism that they employ in their policy. But it would be fair to say, would it not, that one of the continuing reactions to tariff pressure on China has been that China has been routing an enormous and increasing amount of its exports through other geographies in order to circumvent tariffs. So that number on what's ending up in the US probably needs to be looked at in the context of that, don't you think?
To some extent, although I think, look, they're good negotiators. They've been out to Europe and are selling more stuff. We're seeing here in the Middle East that there's more salespeople, more engagement than we've ever seen between this region and China, which is, and I just think there's an awareness that China's actually got some good things that substantially improve a factory or is substantially improve the regeneration of energy. So it's competitiveness as much as it is, just buy China because it's cheap. That's not the case anymore.
No, they've gone from cheap and cheerful. Well, we saw this with the Japanese, we saw it with the Koreans, where massive economic growth has started by copying, sometimes illegally, models from elsewhere in the world, but then very quickly a set of unique value propositions are developed by individual industries. The car industry would be a really good example, where Japan started by doing cheap copies of European cars, and then within a couple of decades was doing leading edge cars. Korea's gone through exactly the same trajectory. And China, of course, is leading the world in a number of areas, particularly in things like technology around solar, technology around batteries, which are, I understand, a key constraint in the manufacture of effective electric vehicles. I understand that China is leading the charge. Like you, I have always found China fascinating and friendly. So I refuse to be spooked into believing that there is some catastrophe impending because of their evil desires. That simply isn't the case. That is really good. Well, this is turning out to be quite positive. Can you, since a lot of my audience are based here in Singapore, which is a bit twitchy at the moment, to be honest, because costs have gone up massively in Singapore and quite a lot of activity shifting out of Singapore because of that. Have you any particular observations on what's going on in Singapore and what the economic outlook, particularly growth, is likely to be here over the next quarter or two?
Yeah, I mean, I would say that Hong Kong, for example, is making a bit of a comeback in financial services, but Singapore still is omnipotent as a regional center in financial services and as a kind of a Western style base for your operations in Asia. And I don't think that's necessarily going to change. But I do sense, as I say, that Hong Kong is coming along leaps and bounds from having bottomed at a very low point. I think there is a sense of a lack of confidence in Asia. And I would say whether it's Singapore, Indonesia, or many other countries, I would say, no, 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 keep your confidence. Your balance sheet is right, right? So you're not carrying that big weight of debt that you can't fund internally or from foreign investors. Number two is, yes, inflation's gone up, but it is abating, which allows many of the central banks across Asia to cut interest rates in order to stimulate the economy. So, I think it's the better quality part of the world. But I sense, as you do, that there's a little lack of confidence. If the confidence comes back, you get onto the front foot, this region can internalize a lot of good growth.
Certainly, if we look at the tech sector, which you and I know were discussing earlier, the general story seems to be that there's tons of cash out there, what people call dry powder, but that it's getting tougher and tougher to actually get the cash if you're a startup because of nervousness among investors. Would that be fair?
That's very fair. I would just say generically, whether it's tech or anything else at the moment, that it's very difficult. Even if you've been promised the money to kind of bring it out of the system and to get it, and you're seeing a lot of VC companies sitting there on hold. I would say that there's been a bit of a pause in the AI phenomenon. So, and I've heard this often that everyone wanted AI ideas. We said, well, here you are, and now people go, oh, there's too many of them. I haven't had enough time to look at it, and the market's moving too fast. So if you're in that sector, you're going to have to be patient. You're going to have to be persistent. It is hard to get hold of the money, but interest rates are coming down. So it should make liquidity conditions better as we go into 2026.
Okay. The news on the tech front's interesting, and I'm going to give another little plug. 4th of November, Leaders in Tech, Co2, the center of the universe in Singapore. We're expecting 100 to 120 people. Wavemaker will be there, Salamander will be there, and of course, we, the Raffles crew, are organizing it. Do sign up and come along, Gary. I know you can't be in town on that day, but send all your Confederates. We'd love to have them. Let's just talk about bank rates for a minute, because I've read that the Fed is expected to make a couple of interest rate reductions over the coming months. Do you buy into that narrative?
I do, but I think we just have to say, look, something could go wrong here, which is inflation. So we've had the tariff increases, but we really haven't seen the impact of those tariff increases through the pipeline into headline inflation. And of course, many of the statisticians are now not working because of the lockdown and the close down of government in the US. So it's quite opaque about inflation. But if you put that to one side, which you really can't, but the rest of the factors that go into that decision suggest weakness. And the service sector and the manufacturing sector of late have seen layoffs at a level we haven't seen for some time. So I would say probably at least 25 basis point cut, one further cut before the end of the year, possibly two.
Okay. Well, that again, I mean, that surely is going to have a stimulus effect on US. I mean, albeit a small one. So that sounds relatively positive. I mean, just a observation, but wasn't it Belgium whose government actually didn't work for nearly a year without the slightest observable impact on economic or any other activity? So, do we need Congress to actually congress?
I
Uh,
think it's a rather large place to have a government lockdown for a year. I think the previous was, well, of recent times was about 36 days. So it looks like we're going to go through that. We'll see. We'll see.
Well, it's always good to talk to you, Gary. I mean, I'm quite enjoying the insanity because why the hell not? Good news out of the Middle East, maybe interest rates cuts, good. Generally positive vibe in Asia. I think it's all upside from now on. So, Gary, thank you very, very much for taking the time to lead us through these important observations. We are going to develop some data together, which will be available for Raffles crew members in your usual fashion in the course of the next week or so. Is that right?
That is, I hope.
Okay.
I'm sure AI will sort it out.
So I need you all to write to Gary Dugan and ensure that we get the data because this all sounds absolutely great. So God bless you, Gary. Thank you very, very much. What we may do is circle back together with one of our tech team and have a further discussion on what's going on in tech in Asia in the course of the next 2 weeks. In the meantime, God bless you.
Thank you.